Today's the big day, and we've got so much going on, with two major reports that have already been released. First was CPI this morning, where the US inflation number surprised everyone. Inflation came out even lower than expected, dropping 1 whole percentage point down to 5% from 6%. Month over month, CPI also came out lower than expected, dropping to 0.1%, and core CPI came out as expected at 0.4%. This report comes out a little before our other big US event happening today, which is the FOMC meetings minutes. We'll be live for that starting at 1:45 Eastern time, so come and join us, and we'll watch the reaction from Powell and the Fed as the FOMC report is released. With inflation falling significantly, do you think it's possible we could see a rate cut before we see another rate hike? Let us know in the comments down below. Canada just released their new monetary policy statement, which remained unchanged at 4.5%. Still to come later on today is the Australian unemployment rate, forecasted to raise up to 3.6%. All right, everybody, let's start off in the market heat map so that we can see how all of our currency pairs are trending so far today.
Happy birthday to you. Happy birthday to you. Happy birthday, dear Edge Finder. Happy birthday to you. Woo!
So up here, this top row, these are our biggest movers to the upside so far today. And I see Euro USD, Aussie USD, Aussie CAD, Euro CAD, CHF JPY, and NZD USD. Down here towards the bottom, I see USD CHF, CAD CHF, Pound CHF, USD JPY, NZD CHF, and Pound Aussie. Euro USD is our biggest mover to the upside, up 0.6%, and USD CHF is our biggest mover to the downside, down 0.82%. So I'm seeing a little bit of trends here, people buying the euro and the Australian dollar to start off the day. And it looks like the dollar is selling off pretty hard based on that CPI report. CPI came out even lower than expected at 5%, and it caused the dollar to drop. Things like the S&P 500 and gold, those went up. We can see here US indices up on the day so far. US 30 and S&P 500, as well as the NASDAQ 100, all up on the day so far based on that CPI report. Let's check out the watch list and see our buy and sell biases. I'm going to remove any indices or commodities that we might have, just indices at the moment. And there we go. Shortens up our list a good bit, but this is our list of currency crosses that we have either as a buy or a sell. We currently have two strong buys, CHF JPY and USD ZAR, and we have one strong sell, Aussie USD. Been hanging around that strong sell bias for a while now. But let's see, we had CPI already come out, we had Canadian interest rates already come out, we have Australian unemployment rate happening later today, as well as FOMC minutes and a whole bunch of important people from the Federal Reserve, Bank of Canada, Bank of England too, I believe, are going to be speaking, throughout the day. So there's just so many opportunities for some crazy volatility in the markets today. But let's pick out a pair that we want to break down ahead of the rest of the news happening today. So I always prefer to look at strong biases over not strong biases, and I think that today I want to go with CHF JPY with a strong buy by a score of +7. Let's check out CHF JPY, and then maybe check out the historical backtest too, because I think it's been a strong buy for a couple days. I'd love to see how it's been trending, how much it's moved up since that strong buy bias. But yeah, strong buy, score of +7. COT data is actually a 0 score, and retail sentiment a score of +1. We can see here that institutional traders are actually heavily favored short on both the yen and the Swiss franc at the moment. The yen 85.61% short, and the Swiss franc 78.75% short. Retail traders are also heavily favored short on this pair as a whole, 94% short at the moment, 6% long. But as we can see right here, I'm just going to skip to the trend reading score. This pair has just absolutely started to skyrocket recently. I mean, it has been just trending higher and higher each day. Price forecast predicts that that will continue to be the case. And I'm curious, let's go ahead and take a look at the historical backtest so that we can see the Edge Finder score related to the actual price chart as well. So if we open up CHF JPY here, we can see that it had a little bit of a lull here. So it was listed as a buy for a while, and it continued to move up and up and up for a while, for a few months, really 2 months, the past 2-ish months, 2-3 months. This thing just, if you held on to it, it kept going higher and higher until it finally came back down and had a lull around here, kind of stayed in this zone right here, but since then has broken through this initial high all the way back March 15th. This high for the year, we've broken through that, and we are continuing to go upwards. I mean, that is a really steep line right here, and it's had that +7 buy score for the past week or so. Let's head back into the breakdown. CHF JPY, our seasonality is a score of +1. So we can see here in the month of April, if you were to isolate just the month of April over the last 10 years to see how CHF JPY trended historically, you would see that it has been bullish in the month of April historically, and that is of course no different to what we're seeing in this month as well. Finish up with our fundamentals here. GDP growth, a score of 0, but inflation, unemployment, and interest rates, all scores of +1 here. So Japan and Switzerland both have GDP scores of 0, GDP growth of 0%. Inflation in Japan, 3.3% compared to 2.9%. Unemployment, 2.6% compared to 2%. And lastly, interest rates on the Japanese yen, negative 0.1% compared to 1.5% on the Swiss franc.
Anyways, guys, we've got about 20 seconds here. We're going to be covering the CPI. Again, do not leave after the spike. After the spike is when things actually get interesting, and I think that there's trades to be taken. I don't trade before. I don't trade the actual spike. I think that that is pure gambling because, again, the spreads get just terrible. So please be very careful. Anyways, we're about to go into the CPI news event. Let's see what the number prints here this morning for us, CPI April 2023. All right, and the S&P 500 is up here on the initial move. Very good for my S&P 500 trade. We are long S&P right now, so this is awesome. Nice pop up to 41.33, a tremendous jump. And same with gold, guys. Gold flying from 2007. Now at this point up to 2021. Very quick move. Look at this volatility there, guys. And that is an impressive. That to me signals, hey, inflation looks more under control than the market may have previously anticipated, and possibly very bullish. Look at this. 4 green charts all at the same time. What a big move. CPI came out at 5%. Is that correct? We are coming in, I believe we had 5% year over year, a better than expected market outcome. Let's see if we can double check that. Guys, let me know if 5%, is that correct? Trevin in the chat says it's 5%. Let me just double check that, see if I can load it myself. But again, what a 5%. Look at that. CPI coming out 5%. Of course, why is this causing the gold market to go up? It's because the dollar is getting hammered on this news. And you can see that occurring across the board. The pound is up against the dollar. The euro is against the dollar. The gold market is up against the dollar. The S&P 500 is, of course, up. What a day here, guys, and the S&P 500 is absolutely rallying. This is great for our trade here. I'm currently long SPY, and wow, what a move there. $380 on the trade. This signal was shared this morning. Not yet. Today, a couple days ago, we entered into the S&P 500 trade, and look at that, just keeps running higher. The beautiful entry that we were able to capture literally was right around the bottom. And sure enough, this thing just keeps going. This is a fantastic move here. Gold up to 2020. What a move there. And let's go back to the individual charts. We'll take a closer look here, see what's going on. What a crazy move. Yeah, gold is absolutely going crazy, and very, very impressive. Again, this has been cool, guys. This is a continuation of what we have been calling for, which is, again, inflation seems to be getting under control. It seems like the Fed is in some ways accomplishing its idea of getting that inflation number down, again, with a better than expected. I know that this number is red. Why is this number red? It's because for the US dollar, this is bearish, right? This shows that inflation is cooling. Of course, high levels of inflation mean that the Federal Reserve is likely to rate hike more. Why is this so impactful to the markets? Well, guys, we have a May meeting from the Federal Reserve where they're going to make a decision as to whether or not they want to raise by 25 basis points, or right now the consensus is either 25 on the upper end or 0. leaving things flat in terms of rate hikes. And with this news today, this side of the camp probably just got a little bit more popular. I was watching the latest in terms of Fed projections, and most people, about 75% of the market, was thinking, hey, there's a 25 basis point rate hike coming in May. Well, with today's news, slightly better than expected, that number probably shrinks a little bit. And we probably see a little bit more speculators, economists taking a look and saying, hey, maybe they just stay flat for the next rate hike. Maybe they do not do another rate hike. Maybe they're done with rate hikes. This is what the market is pricing in here this morning. And again, this is why we talk fundamentals over and over, is because we have been sort of on that side of the camp. We've been saying, hey, I think that there may be a little bit overestimation in terms of, or maybe inflation cools a little faster than expected. And that's exactly why we have been long biased on things like the S&P 500 trade. Look at this beautiful breakout here. The signal from today is doing absolutely fantastic. Let's see what is going on here in terms of the S&P trade. So we took SPX 500 410. So 2 days ago, we entered into the S&P 500 trade, and this thing just beautifully has rallied since. You can see our analysis where we essentially got in right on this blue line, and bam, just up to 4150 we go. Fantastic move. Yeah, it looks increasingly likely, not a certainty, but increasingly likely that we could in fact have a pause at the next Federal Reserve meeting. And that is, of course, where things get very, very interesting. Because again, what that does, guys, is that if the Fed signals that it's going to potentially turn dovish or slow down its rate hike process, guess which markets could fly? Gold and the S&P 500. And guess which markets would die? The dollar, right? The dollar would get crushed in that atmosphere. So again, what this does, guys, and we're not going to have our data just yet. We really should get this thing to update a little quicker. We've talked about that in the past. It would be very nice. But anyways, it's not quite showing here yet, guys. But what this does today, this event showed that CPI came down to 5%, lowering our inflation even further, getting us further away from that peak inflation that we saw in June 2022. This continues to be a bullish catalyst for the gold and S&P 500 markets. In my personal opinion, I will continue to be long biased on both of them. Sorry for the voice cracks. It's early morning. I've got my coffee though, so I'm wide awake. Anyways, guys, in terms of inflation numbers, we will see this number now update to about 5%, which is what we got reported here today. A very, very notable number to hit today. And again, a better than expected CPI number. Let's talk about the other figures for a second. Month over month came out 0.1%. That's where we gained that 0.1% on the year. And if we take a look at core CPI came out as expected. If you want to take the other side of the camp, you may say, well, hey, core CPI is what Federal Reserve really pays attention to. And that came out as exactly as expected. But again, you get a little bit of optimism in the market with a lower than expected print at 5% for the year over year. So yeah, what a move there, guys.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.